Good morning. We're going to start our prep here for Friday, November 15th. Just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. Were you able to catch any of the $10 billion in gold coins falling out of Elon Musk's pocket yesterday? Were you ready for that tail risk of the downside move? Did you know what time the big events were to move the market? If you benefited from any of our plans yesterday, then hit like and subscribe to stay up to date on our videos. And if not, it's time to level up your game. If we look at yesterday's auction, we mentioned Wednesday seeing a slight increase in volume, and yesterday we saw the supply begin to get introduced with a 6.48% increase in volume day over day. As we laid out yesterday was the day that the market would move out of the range if Chicago and New York wanted to. Our low end scenario of breaking below 6,000, moving towards that 59.54 to 59.59 level that we had was the target. And it played out on our major catalyst of Powell. So we had laid out that 6,000 is where we would look for the market to hold. And there were some early longs, but the better trade was to the downside. And again, that's because we gave you the big level on Tesla. And that level was 326. Tesla stayed below there all day, and that was the sign that which direction the market would move. And just ahead of the close, before we could get down to our 59 level, we expected the market makers to come in, and I guess the phones were ringing in Chicago. This is Tesla here. We had given this out all week long, and once that broke, that was going to be the big downside move. And again, Tesla isn't always our guide. But with the election, Musk's new role, it's very tied to the sentiment right now. And if you understand how to properly use it, you can capitalize. In the overnight auction, let's take a look here what's been happening. And we have been mostly down right to 59.30, which is our major line in the sand. And 59.30 was our big level that we knew heading into the close last night that was going to be the big one for today. And we'll show this here. So yesterday at 4 o'clock, we knew our big level was going to be 59.42. We want to see where that ends. And so at the end of the day session, we knew that 59.30 half is right where we need to be paying very close attention because that is where the market makers will step in. And even in the overnight where there's light volume, they have a business agenda and business to protect. If you think of a retail store, they want to protect their product, whether it's during a slow period or a busy period. Uh, if it's Black Friday and everybody's there, they might increase security. If it's a slow day and there's not many people, if something drastically were to change, they would get engagement and involvement, and that's what we're seeing here. They're protecting uh, their product essentially, and we saw that come in right down to a tick away from our 30 half level that we knew at the end of the day yesterday. And what you want when you think of these is not just to have to watch the tape, find the bid and the offer, but if you can understand the tools, which we teach all of our students and give them access to all of our proprietary tools, how to use everything, you can be more like an athlete watching tape and then understanding when to call an audible at the line in real time, as opposed to always playing a step behind, trying to understand what's happening. And so right now we've come down. We saw the defense really come in here, and this is going to be our most critical line for the day today. From a positioning standpoint, longer term commercials are short based on the COT. And again, we'll get new data at the end of the day today for that. So we'll see what the positioning is. Short-term market makers are in risk neutral mode. And so that will change our price action a little bit today. And today is weekend. And it's also OPEX, and price behaves differently on these days as there's an agenda to play out and money to clean up. So watching the areas where there's a lot of money at risk, knowing what will trigger it, and then that'll tell us where to focus. Longs from the election overall are still in the money as we've made this move up, but anybody who chased price on Thursday and Friday last week is now underwater, and anybody short for this week is doing pretty well so far. Um, from a flow standpoint, the support bid that we've had is gone. It's down to $60 million, which isn't much in the market. So really what we see is we're fairly neutral on that support bid, and it really becomes a big pressure point to the upside and downside where we get a $7 billion shift at 60.10 or underneath 59.30. And that 59.30 is also where we have our big line in the sand today. As long as 59.30 holds, our market makers will be in risk compression mode still. Below that, and we'll see the final bid at 59.26. And if we fail there, then they go into risk absorbing mode, which changes the way everything behaves. Under 59.64, and anyone that tried to buy the dip yesterday could get margin called out. So we'll have to see where we open in RTH. And commercials, short-term commercials, are in risk absorbing mode, whereas our longer-term commercials market makers are in that risk neutral mode. So we have kind of a battle going on between that 59.30 and 59.82, which is where we're expecting the market to kind of stay between and rotate today. Short-term fund managers are signaling there's no risk to be concerned about, and margin traders on a whole are still seeing an influx in capital of 19.76% increase on a trailing 12-month. And that tells us that there's still more risk sentiment coming into the market, and we'll have to wait for our extension indicator to trigger any kind of reversal or tell us that that's going to change. But right now, it's still getting an increase in margin trading overall. And as we mentioned multiple times this week, after today, so next week, the movement of the machine turns more favorable as our risk window changes. Volume is slowly coming back in, but nothing we normally see on these major moves lower. So while we've seen and laid out the increase for you the last few days and how that's signaling some supply coming in, it's not triggering so much that's telling at this point yet telling us any significant changes to the market. Volatility does cluster, and as we mentioned yesterday that we're in the desert, it hasn't changed. And so with these three factors, it's still more supportive coming into next week. The big factor that changes our parameters is that 59.30. And so today we're looking for rotational price action where the powers that be will hold the market around that 59.30, come in, and we would expect defense, and we'll look for extreme defense to come in if we start to break that down to that 26 down to 21. And as long as we do hold that, we're looking for a move back up towards that 59.77 to 80 area with I'm planning on longs at that 59.30 and 59.48. If we make a move higher, then I'm going to look for rotational mean reverting trades back down. If we break 59.30, looking for big support at that 10, and if that doesn't come in, then we know that the market is going to change characteristics, and our short is at that 59.12 for a much cleaner move to the downside. We did say that yesterday was going to be the day that if they wanted to move the market out of its range, that was the day. We saw that, and today is now more the positioning day into next week and next month. So if these videos are helping you, and if you're able to capitalize, please like and subscribe, and have a great day trading out there.